Okay. Good evening to every one of you. It's been a while. But finally, I'm back. I'm back at recording some of the videos um, for our journey. Okay. Today we'll talk about money management, because for you to be a very good forex trader, or a very good profitable forex trader, you need to learn. Well, so guys, we want to talk about the rule of 72 in forex and money management, because as forex traders we should learn how to control the money or manage the money we have invested in the market. If you don't know how to manage the money well, you lose all the money within a short time. But if you have a principled money management system, something that you follow religiously, then you can be in the forex market and make a lot of money. Okay, so we'll go into this right away. So the rule of 72 states that whatever you get on any amount of money divided from 72 is the number of periods it will take for the money to double. Okay, so we are talking about the amount of money invested. Now there's an example here. Say you invested $1,000, then the interest rate per annum, that is per year, is 6%. Now it will take 12 years for your money to double, or for your money to grow from 1,000 to 2,000. Now let's quickly do a calculation of this. So you have 1,000, then the rule of 72 will divide by the amount invested, then it will equal, you can do your calculation. 72 divided by 6 is 12. Yeah, 72 divided by 6, you can do that. Let me get a calculator. Oh, come on. Okay, so 72 divided by 12, 72 divided by 6, come on. Hey, 72 divided by 6 equals 12 years. So it will take 12 years for this money to double. Yeah, let me keep the calculator here, because we'll be doing some extra calculations now. So let's just say that you were making about, say, 15% per annum with the same invested amount. That would be, so the period here is still 1 year. Okay, so, and you invested $1,000 at 15%, so then the percentage will become 15%. So how long would it take for that? So let's get our calculator again. So we have 72 divided by 15. It will take almost 5 years. It will take about 5 years for the money to double or become 2 years. Now here the period in question is 1 year, but in trading, in forex trading, sometimes depending on the person who is trading, he might set targets for a day or a week or a month. And so maybe the person will say that I'm targeting, or I'm aiming at maybe about 5% a month, or 10% a month, or maybe 3% a month. And so that will become the period. Then whatever amount he invests, let's say the person invested, say, $200, and at the end of the month he realized something around 8 or 10%. Now I have a typical situation here. You remember when we started I set up an account, and this is the account. We had $200 in the account, and you can see it there. Now it has grown from 200 to 217. Now this growth is about 8.78%, which is about 9%. You can make your calculations. That is 217 over 200 times 100%. You see that it's about 8.78%. So, but this is a monthly thing. Let me show you the full statement. Okay, let me show you the full statement, guys. This is it. This is the full statement of this account. So the account was opened on the 7th, on the 3rd of July, with an initial deposit of $200. But this is not real money, this is demo, and these are the trades that have been taken over the period. Well, not that if you check the days, you realize that not every I couldn't take trades every single day of the month, because I look for the best opportunities. So when the best opportunities come, I go into trade. And you can see that we had the same amount of risk throughout, and so the account grew from 200 to 200. So we made about 17.56 dollars profit on that. And so, and this is a monthly report, so that is about 9%. So let's use that to make our calculation. So let's say we invested $200, at, that is about 9%. How many months? This time the period is months, it's no more years. Would it take for the amount to double from 200 to $400? Yeah, so let's, this time is in months. So how many months? Let's do the calculation quickly. We have 72 divided by 9. So it will take us about 8 months to be able to double this account. Okay, 8 months. It's not bad. There's no bank that will pay you a double of your investment within 8 months. If you can do that, it's cool. So I'll keep trading the account, and I'll give you reports month after month. Now the profit could be weekly or daily. Okay, so let's just say that every day we still have invested $200, and every day we're making about 1% profit per day. This time is day. How many days would it take for the amount to double and grow from 200 to 400? How many days? So this will be 72 divided by 1, which will give us 72 days. So 72 days, in 72 days we have 30, that is, let's say 3.5 months. So every 3.5 months you are able to double your account. That will be interesting, man. That will be interesting. So that will be, it will take about 8 months. So let's just, oh no, 8 months. That's about 3.5 months. That's what we said. Yes, 3.5 months. So let's just say the same amount invested, but you were doing 2% a day. How many days would it take for 200 to grow at 2% interest per day? So that will be 72 divided by 2. Let's do that. 72 divided by 2. 72 divided by 2, 36. So in 36 days your amount will double. That is just a little over a month. So let's just say you were doubling your account. Let's say every 1.5 months you are doubling your account. It means that by the end of the year you have how much? Do your calculations and you see that is quite a substantial amount of money. 1.5 months, it means that in the first 1.5 months you have 400. Then the next 1.5 months, which will be 3 months time, you have $800. Then so 800 in 3 months. So in another 3 months, that 800 will double. That will be 1,006. No, it will quadruple. That is 800 to 1,006, then to 3,000. So in another 3 months it will be 3,200. Okay, so that is how it progresses. So we can use the calculator to do this. Yes, we can use the calculator to do this, and it goes on, right? It goes on. 3,200 in 6 months. Then in another 1.5 months, that'll be 7,400. Then in the 9th month, well, that's a lot of money. Let me check it. 7,400 times 2, 14,800 in the 9th month. So it means the money could grow to close to about $30,000 in a year. Wow, that is 2% every 1.5 months. Interesting. So let's continue with our lesson. So that is that. When you're able to have, in fact, as a trader, you should have a consistent gain on your mind. Say 1% per day, or 1% per week, or say 10% per month. Then you can base on that to grow your capital, and with compound interest you'll be able to see some substantial amount of money over a long period or within a year. Now let's talk a little bit about money management. Then when it comes to money management, I have my 3 rules. See, Forex could be very profitable, but it is a two-edged sword. If you are not winning, you are losing. Therefore, before you start trading with real money, you should get a demo account. Practice on demo till you are very consistent before switching to your live account. And the second rule for me is that do not invest more money than you can afford to lose. So it means that if you cannot put in $500 or $1,000, or even if you have $500 or $1,000 and you feel that that is too much of a risk you are taking in the forex market, then please don't put that money into a trading account. Put money that you are comfortable with. But of course, this is an investment, so the money shouldn't be too small. The lowest you should possibly start with should be around, for me, about $200. But you could also start with $100. Yeah, and please don't borrow money to trade. Very, very important. Don't borrow money to trade. It has happened to me before, and man, it was some experience. So it is something that I would tell you. And the final point is that use proper risk to reward ratios. Now, risk to reward is R/R. Okay, so use proper risk to reward ratios. Now I'll take my time to go into what proper risk to reward ratio is, but let me go through this. The first item you see, 1:1 R/R, which is 1:1 risk to reward, means that let's say you have, say, $1,000 invested, 1,000, and you place a trade where you were aiming at, say, 100 pips. When you make the 100 pips, your 1,000 would grow, let's say, from 1,000 to 1,100 when you are doing a mini lot. Okay, 1,000 to 1,100. So if you are, say, you are doing 1:1 risk to reward ratio, it means if you are profit target, which we call take profit, TP, take profit, TP, is, say, 100 pips. 100 pips. 1:1 risk to reward ratio means that when your risk and your profit targets are the same, so it means you are going for 100 pips. It means you're also risking 100 pips for 100 pips. So let's say if this 100 pips is equal to $100, or it could even be equal to $10, you are risking $10 for $10. Okay, so let's just say you bought, no, you were able to you took about 10 trades. Then out of the 10 trades, you won about 6 of them. 6 wins and, say, 4 losses. It means that here you won, it's equal to $600 minus $400, because 6 wins, we remember that every win for us is about $100 for 100 pips, and every loss for us is the same amount, $100. So we won 6 times $100 is 600, and 4, we lost 4, so 4 times $100 is 400. So then we have a total profit of 200. But let's just say you won 3 and lost 7. The risk to reward ratio, which means that you have a loss of $700 minus a profit of 300, and the difference is negative $400. Okay, so that is for 1:1 risk to reward ratio. Let's apply the same scenario to 2:1. For 2:1, it means that if you are looking for $100, $100 profit, the risk you take is $50. So if you won, say, 6 trades, 6 times 100 will give us 600, and you lost 4 trades, 4 times 50 will be $200. Then the total is 400 profit. So if you want, say, only 3 trades out of 10, then that will give us 300 minus, then 7 times 50 will be 35. 300 minus 350, which equals negative $50 for this. Now when you are doing 3:1, it means that if your profit is about $100, your risk, if profit is $100, comma, risk is $33. Get it? For 3:1 risk to reward ratio. And so if you want 6 trades, that will be $600 minus what? $600 minus 33 times 4. Let me calculate it with a calculator. Okay, so 33 times 4, 132. So 600 minus 132 will give us, no, let me do it the other way around. 600 minus 132, 468. So 132, 468. Then if you want 3, which will be 300, minus 33 times 7. So I'll calculate again. 33 times 7, 231. So it's about $69 profit. And also, if you do 4:1 risk to reward ratio, meaning that for every $100 profit, the risk is $25. $25. So if you placed out of 10, you win 6, that will be 600, and 25, you lost 4, so 20, that will be 25 times 4, which is 100. Then your profit will be 500. And if you won 3, which will be 300 minus 7, 25 times 7, equal to 175. So therefore 300 minus 175 is 125. Yeah, 125. So let's go to positive 125. Yeah, so that is you realize that where your risk was bigger, you were making bigger losses. But when the risk to reward is reducing, especially where the risk is reducing against the reward, the possible profit, you realize that the profit margin was also going up. And so I would advise that you, in your trading, the minimum risk to reward ratio you should use should be or must be 2:1. Now 2:1 will make your life easy. Even if you lost, like we saw, if you lost about 7 trades, your overall loss, and you win about 3 trades, your overall loss will still be down. Yeah. And so that's that for this lesson. In our next lesson, we'll look at types of analysis and also look at tools for technical analysis. So see you in the next video. Thank you. Bye.